This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Crude oil and gasoline stocks fell in the most recent week while distillate inventories were higher, the U.S. Energy Information Administration said on Wednesday. Crude inventories fell by 447,000 barrels in the week to August 6 to 438.8 million barrels, compared with analysts' expectations in a Reuters poll for a 1.3 million barrel drop. Crude stocks at the Cushing, Oklahoma, delivery hub fell by 325,000 barrels in the last week, EIA said. Refinery crude runs rose by 277,000 barrels per day in the last week, EIA said.
Oil fell below $70 a barrel on Wednesday as the United States urged OPEC and its oil-producing partners to boost output, saying current production was not enough and could threaten the global economic recovery. The price of Brent crude is up 35% this year, supported by OPEC-led supply curbs, even after oil last week suffered the steepest weekly loss in months on worries that travel restrictions to curb coronavirus infections would hit demand. The White House said in a statement on Wednesday that the Biden administration had urged OPEC and its partners to boost production. CNBC had earlier reported the development.
Moving on to the top news in the energy sector.
U.S. President Joe Biden's top aides are pressuring OPEC and its allies to boost oil output to tackle rising gasoline prices that they see as a threat to global economic recovery. Biden's national security advisor Jake Sullivan criticized the world's major oil producers, including Saudi Arabia, for what he said were insufficient crude production levels in the aftermath of the global COVID-19 pandemic. U.S. gasoline prices are running at about $3.18 a gallon at the pumps, up more than $1 from last year at this time, according to the American Automobile Association.
Crude oil stockpiles fell modestly last week, while gasoline inventories dipped to their lowest level since November, the U.S. Energy Information Administration said on Wednesday. Crude inventories fell by 447,000 barrels in the week to August 6 to 438.8 million barrels, compared with analysts' expectations in a Reuters poll for a 1.3 million barrel drop. Overall crude inventories have been on the decline for several weeks due to increased demand. Fuel consumption, as measured by products supplied, fell in the most recent week, led by declines in gasoline and jet fuel supplied. Next, we have the top news in metal markets. Gold prices jumped on Wednesday after data showing U.S. consumer prices rose at a slower pace last month eased fears that the Federal Reserve would taper its economic support sooner than expected. Spot gold rose 1.1% to $1,748.36 per ounce by 1225 p.m. EDT, 1625 GMT, recovering some ground after 4 straight sessions of declines. U.S. gold futures gained 1% to $1,749.60. Concerns over a sooner-than-expected tapering by the U.S. central bank sparked by a strong U.S. jobs report last week, has hammered bullion and has kept it well below the key $1,800 mark. But Philip Streibel, chief market strategist at Blue Line Futures in Chicago, said Wednesday's U.S. inflation data helped ease those concerns, buoying gold.
China's efforts to be seen as a responsible investor overseas are at risk from high rates of human rights abuses linked to its business operations, especially in the metals and mining sector, a report released on Wednesday found. The Business and Human Rights Resource Center, a global non-governmental organization, NGO, logged 679 charges of human rights abuse against Chinese companies operating abroad between 2013 and 2020. Metals and mining drew the most allegations, 236, or 35% of the total. Peru, the world's second biggest copper producer, and China's neighbor Myanmar, a leading supplier of tin and rare earth ore, were named as hotspots.
We will now look at the top news in the agricultural sector.
2 leading agriculture consultancies in Moscow, IKAR and Sovcon, cut their estimates of Russia's 2021 wheat crop on Wednesday due to dry, hot weather, they said. Russia is the world's largest wheat exporter, supplying it to Africa and the Middle East. It is currently harvesting its 2021 crop with lower yields than a year ago. IKAR cut its forecast for Russia's 2021 wheat crop to 77 million tons from 78.5 million due to lower estimates for the country's central, Volga and Urals regions, its head, Dmitry Rilko said in a note. IKAR's barley forecast was reduced by 500,000 tons to 18 million tons, he added.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.